I'd like to get your perspective as to where you think interest rates are headed, in the future.
You're never gonna know what's going on in the market, but you gotta prepare for the best case scenario, for the worst case scenario. You're gonna have a plan. To be honest, nobody expected the rates gonna be that high that long, but hopefully, most likely, they're gonna start cutting next year, going into 27 into 2028.
Welcome to the Freedom Point Podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. This is kind of like your flashing emergency type session today because we're going to really unpack the topic related to financing, debt structures, interest rates, challenges and risks in the market from an interest rate perspective. Also, we're going to unpack a little bit about kind of the distress, that we're seeing in the commercial real estate space today, largely predicated as a direct result of the historic run up in interest rates that occurred, 3 to 4 years ago, and is still kind of permeating through the markets today. So I've got another amazing guest on the line to talk with us specifically about, financing in commercial real estate. I have George Otel. George, welcome to the show.
Jeremy, thanks for having me. Interesting times for business owners, investors. It's a little bit new waters to be going through, but at the same time, it's opportunity, as we mentioned earlier.
Well, absolutely. I'd love George. Kind of before we chop up the meat and the potatoes here. I'd love for us to maybe unpack a little bit more about George. Kind of your journey in this space and predominantly what you're focused on today. In the commercial real estate space.
Yeah, so I had the transportation company initially 2012, 2015. Then after that, I started doing real estate, specifically doing short sales. So basically, we were negotiating the deals from the bank that using a special strategy that's called short sales. Then 2018, I started the U.S. business funding. We started doing equipment financing, SBA loans, working capital. And last 5 years, we've been more proactive in commercial real estate. Uh, Considering the current weather or situation in the market, we focus more on a lot of distressed situation. Or recently, a lot we get a lot of inbound regarding a lot of lenders. They change the criteria and trying to stay conservative. I work with over 1,000 lending sources, and the good part, I'm able to find out who is the dominant. Who is dominating the industry and actually helping people, because there is people with resources. They have nice teams. They've been doing this for 20, 30 years, and they allocated a lot of funds to commercial real estate, and they able to move quick. So if anybody has like any situation, we'll be happy to discuss. It's commercial real estate, any type of asset nationwide, and we have funds that they able to they're pretty sophisticated, and they able to understand the situation, and actually that's their money. It's not, they don't have to go through a lot of hierarchy through supervisor committee to do that. They're moving fast, and I see a lot of good results, and it feels good for me because look, I mean, if there is an option to bail out people, I'm always excited to see that, because it's the backbone of the America, to have a second chance and maybe not to hit the reset.
Yeah, no, I appreciate you unpacking that. And whether you're an individual that is looking to, start a business or purchase an existing business, or maybe you're looking to buy into a franchise, maybe you're looking to, start acquiring single family homes or small multis or syndicating a commercial real estate property, more often than not, you're going to need to leverage, debt, in that acquisition. So I want to talk specifically about the commercial real estate space. And I'm not maybe talking about any specific asset class, but just kind of keeping them in general. What are the types of financing structures, have you seen more common in today's environment with where interest rates have really skyrocketed over the last few years? Historically, interest rates aren't really all that elevated. They're just a lot more elevated today than they were back in 2021 and 2022 as the Federal Reserve Bank started increasing interest rates in order to really fight back against inflationary, pressures. Are you seeing your borrowers typically navigating more towards a bridge loan or a floating interest rate loan, product? Or are you typically seeing borrowers in the commercial real estate space maybe moving towards more of an agency, financing through a Fannie Freddie type product?
Yes, I do a lot of things. Mostly, I'm focusing on three areas. It's whoever is building up to 4 units, the fix who do fix and flips, building up to 4 units. Then we focus again on small business owners looking to buy their own property using an SBA loan. So using an SBA loan is giving the opportunity to buy something with a lower down payment. Then eventually, also the so now we go through high rates as you mentioned. So that could be the good part because if you qualify right now, you get that. Then a year later, you're gonna be at lower interest. And then let's say 2 years later, I'm gonna help you refinance. So right now it's 10.5 with SBA buying a 7A property. 504 is a little bit lower. It's mid seven. So it all depends how you qualify. So basically, business owner looking to buy property, any type of property, as far as you're gonna occupy 51%. The best right now is to go with the it's SBA. It's a little bit of work, but it's the best for you to. So number one goal is you gotta grab the property of the street. You gotta put it in your name. Then 2 years later, you're gonna refinance it, and then you're winning. That's how you win. You refinance because you want to buy when the rates are high because there's not so much competition. I mean, you're not gonna buy with a low down payment at the distress level with the low rates. No, it's always a cocktail. It's a mixed combination. So you gotta choose. But if the property makes sense now at 10%, it obviously gonna make much more sense at 7 or 6%. So it's that's when you get your nice chunk of cash when you refinance, and it's that's how you win.
Yeah, that makes total sense. If you don't mind, George, I'd like to, talk to us a little bit more about, what are some of the most common reasons that businesses struggle to get financing, and how do you recommend that those businesses overcome those roadblocks?
So the idea is like people, business owners, they talking with the local bank. The local bank, they don't understand the business too much, and they don't understand the business buying commercial real estate. They depository. They there for a reason. They may do some type of commercial real estate just to say they doing it, but not to an extent that they can actually help you. Look, so when everybody's doing good, your local bank may be the best to give you the lowest rate, but we don't go through the best times right now, and a lot of different situation. I see things in the market that regular people can have nightmares, and the whole idea is like I know how to structure. So when, let's say, somebody's coming to me, or any clients, any prospects, we have like a 10-15 minutes conversation, and during that time I have like 5-6 scenarios lined up. I know what to do and how to do it and how to do the best. And because you got to have scenarios. You can just go to one bank and wait for 30 days. At the end they're gonna say no, so it's you're gonna waste your time, and that's the problem. That's the problem. So I have that, we have options, and I encourage people to give us a call. It's We have like a 10 15 minutes conversation. It's free, we don't charge you anything for that, and even to help you understand your situation in the market, or at least get prepared for the next year. Number one. Number two, it's basically, if you're paying rent, if you're paying over $5,000 in rent, most likely you're paying for the mortgage, and you're paying for a landlord's vacation or landlord's pension. You choose, but that's how it works, because nobody's gonna take the rent and money from the pocket to pay the mortgage. That's not how it works, and you know it, and I know it. So I help that. Look, I mean, landlords like when I say that, because at some point, even right now, there is a lot of baby boomers, they're retiring, and they're looking for someone to buy their property. So if you know me, let's say you're coming to George, you're coming to US Business Funding, we get you pre-approved. So I tell people, you're wasting your time when you shopping around without a pre-approval, because you know how much you qualify for. So let's say if you qualify for 3 million, you're looking for up to 3 million. You qualify, then you find the property. You wake up one day, you find the property, you send the offer, you send the pre-approval, and the seller look at you like a serious person and is willing to do business with you, not just somebody that, like, I want to try to see if I qualify. You're not serious because you didn't do your homework. You don't look serious, because the only question is like, show me the money. You know how was that.
I'm Zach Captonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investors. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
I'd like to talk about, that small business owner, or maybe that, real estate investor that is preparing for a sale or an acquisition. And what are some of the key financial considerations that that individual oftentimes overlooks?
So to make it simple is basically we gotta look at your current financials, what you stand, how, and what are the best option. Because if you basically all it comes to what you're trying to do and your timeline. Because if, let's say, I have clients, they want to do an SBA, and they find something, they want to move fast, so the seller is not going to be able to wait for them 45, 60 days. So recent situation, they found like a really good deal. We were able to secure a bridge loan, so we put the property in their name. It was done in 2 weeks, couple $1 million transaction. Then we're doing the SBA. So it's gonna take a little bit of work, but eventually they buy the property with a small discount. Eventually the bridge loan has a premium. You gotta pay the fees, you got to pay higher interest rates. So basically, if we closing in 5 6 months, the whole thing, the interest rate is insignificant, because you don't pay that much interest. It's just the fees to get that. But bottom line, he's gonna be making like 5 600,000 on a deal on day one, once we refinance with the SBA. So it's worth it. It's not how much you pay, but how much you get for, how much you receive, basically how much you make, because he's gonna making 5 600,000 on a deal from day one. So that's kind of the idea. So you need to understand. So any business owner thinking to buy, to refinance, you just gotta understand the perspective, your situation in the market, and that's how you start. That's, if you don't qualify now, you get prepared. November, December, do your taxes in January, and then I tell you what to do and how to do it. Then basically, what so we're telling you what bank gonna look for, what they wanna see. They see A, B, C. So you're gonna do it them accordingly, and then it's basically it's how you qualify, and then it's a process. The commercial real estate, it takes not the weeks, not months, but I mean a long time. But it's worth it. It's This is the, as a business owner, this is your retirement plan, because you may sell the business, but you can keep the building. So I know a lot of people getting 20, 30,000 checks a month, and the building is paid, and it's a nice way to enjoy life.
Yeah, no, it makes sense. And, I, as an investor, by the way, I typically like to invest in things I understand, number one, but I'm also looking for areas of opportunity. I call those opportunistic type investments. And I personally, within the last 36 months, have really doubled down, on my investing specifically in commercial real estate assets. Most of which are held in multifamily, but also other, commercial real estate assets. And the main genesis behind me doubling down is because of the distress in the market today. Valuations are down depending on asset class and market location, anywhere from 20 to upwards of 50%. And I see that as an area of opportunity. The major distress in investors strategies is really as a direct result of the senior debt, the debt on that service, because of the interest rates really skyrocketing. And the operator's not expecting interest rates to go from 3.5% to 8.5% overnight, many of which didn't manufacture a low in the money rate cap, or maybe they didn't leverage having additional reserves built on the front end to be able to extend out those loans. And now lenders are not lending at 80% LTV. Now it's 60 to 70% LTV. And so for operators to extend out those loans, they need to purchase down, or need to invest down, I should say, the principal balance on those loans in order to make those loans, extend, on out into the future. So I'd like for you to talk to us a little bit more about kind of the distress that you're seeing, in the commercial real estate space as a direct result of higher interest rates. But also, I'd like to get your perspective as to where you think interest rates are headed, in the future.
Yes. So basically, when it comes to commercial right now, you describe it totally perfect. It's the way you see it, is the way it is. And I like to have this conversation with you because you address it correctly, and I like that your listeners have a good source of information, because I can confirm that whatever you said, it's 100% correct. So the idea is, you're never gonna know what's going on in the market, but you gotta prepare for the best case scenario, for the worst case scenario. You're gonna have a plan. You're gonna, as I mentioned, me working with all those lenders, seeing all those scenarios on a daily basis. We have like 5 6 scenarios lined up. I mean, I'm not just relying on one option. No, I have that. If not this, then that, and how it works. And I work with the pretty sophisticated people that they I some groups that I work currently, they do those non-performing distress deals on a daily basis. And the way I see they turn things around, it's really impressive. And it's nobody, to be honest, nobody expected the rates gonna be that high, that long, higher for longer. But hopefully, most likely, they're gonna start cutting next year, going to 27 into 2028. That's kind of the trend, and that's what I hear from my end. We have I pay for a lot of data and access to rooms of people where you know that they control a lot of assets, and that's kind of the idea. But the most important thing, there is there's still options in the market. It's just, however, it's the whole environment is changed drastically. It's not pleasant. I mean, sometimes so for example, sometimes I have deals that I'm talking with the 20 30 lenders. I mean, not at the same time, but one after another, and they decline it. But I was able to find through connection, obviously, get me to the people that understand how to do this properly. And we see a lot of inflow recently. We're talking about big pipelines of different situation. But the good part is we able to help those people, through bridge loans, to refis, to so another things to consider is like we able to facilitate the gap, the bridge, to take people out of the situation, to refinance that, even if they need the bridge. So that's number one. Then number two, we do the bridge loan with the consideration we have an exit for the long term as well. So that's it's like, I'm not gonna give you the bridge loan and I'll see you later. It's like, no, it's we creating the relationship, and we picture the whole plan. So basically, you get the bridge, you kind of clean the situation, then we position you for the long term debt to be able to succeed. So that's, I think that's the best. That's the best. And uh, I'm able to do this because of relationship I built over the years, and the work I did with my team, and resources we build up. So it's really great to. It's bad, but it's still avoidable. And look, as one of my main fans said, it's a shame. He's saying George is a shame, but because people are not able to do this, it's, everybody's offering you money when everything is nice, when it's sunny, but when it got a little bit gloomy, it's I see the market sentiment talking with those lenders, and if I had the money, I'll do it myself, but I don't have the money. So it's still it's good part, there is still option, I speak with the owners every week that need some kind of like turnaround. And it's good because, if the financing is the blood of the business, and is the blood of the right financing is the blood of anything, the business, commercial real estate. And that's how it works. Because you see somebody that is struggling, so it doesn't mean it's everything is bad. It's just, one of the things are bad, and there's a way to fix it. It's so that's why we're here for, and I'm happy to help. you know uh, yeah, maybe somebody from your audience needs help, or needs like a call, or I'll be able to jump on a call. Anything commercial, 1 million to 100 million, we're able to help. Any type of assets nationwide, either bridge or long term or refinance, cash out. We pretty creative and sophisticated.
Yeah, I definitely appreciate that, and you're exactly right. I mean, there's some blood in the streets right now, and the opportunistic investors, who are able to do creative financing, type structures, can really get good quality cash flowing assets or businesses at a much better basis than maybe they would have, you know, uh, 36 to 48 months ago. But I can tell you all too well, I'm definitely laser focused on that 10-year treasury, and I'm hitting that refresh button multiple times a day to kind of see where that's headed. But I hope you're right. I certainly hope that interest rates to a larger extent have really stabilized, or maybe even trending downward. As interest rates decline, that does spur transaction volume, and when transaction volume is spurred, typically we see a compression of exit cap rates. And exit cap rates are important as it comes down to how businesses and real estate properties are valued in the market today. So I think lower interest rates, George, are going to help everybody, especially if you're a small business owner or you're a real estate owner. But at the same token, we want to make sure we've got inflation under control at the same time, because as inflation maybe remains elevated, it definitely deteriorates everybody's purchasing power, so to speak, and erodes our net worth, if that makes any sense.
Look, as I mentioned, nobody expected the interest gonna stay higher for this long. But at the same time, there is a lot of distress. It needs to be kind of like addressed. And let's see. It's we shoot for the best. We prepare for the worst. And yeah, there's definitely an opportunity. So also at the same time, if I I'm looking from this perspective. If somebody's going to be in trouble in 2 3 months, we better reach out now because the time is in your favor. It's we have situation when people come to us, they have like 3 months, 3 weeks away from total collapse, and we're still able to find some option, but it's more in your favor when you have like 5 6 weeks at least, not like 2 weeks or 3 weeks. So that's really good to consider, because there is options, but
Always options when it comes to lending. So yeah, I really appreciate that reminder, to connect with your lending source early and often. George, I appreciate the value that you brought a listening audience today. What would maybe be one or two different ways that our listeners can connect with you to learn more about what you're up to?
my LinkedIn is George Otel. Then our website is usbizfunding.net, usbizfunding.net, or another website it's usbusinessfunding.net. And send me a line or whatever you want to talk. I'll be happy to assist. Anything financing, investing. I'm able to help you. And if I'm not able to help you, I may guide you through someone that has ability to do so. So
That's great, George. Well, really appreciate the value that you brought us again here today. On listening audience, we thank you for jumping into yet another episode of The Freedom Point. I look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting.